Afternoon, everybody. We're okay to start. I will start proceedings off. So, good afternoon, and welcome to the meeting of the West Mercia Supplies Pensions Joint Committee. I'm obliged to inform you that this meeting is being live streamed and recorded. Can I please ask you to ensure your mobile phones are all switched off? And can you also make sure that you use the microphones, please, because it's difficult to pick it up without those microphones being used. I'll just ask all of the members and officers to introduce themselves as we go around the table. So I'll just start introducing myself. My name is James Walton. I'm Executive Director and Section 151 Officer at Shropshire Council, and I'm the Treasurer for the West Mercia Supplies and Pensions Committee. Do you want to move, friend?
So Shelley, Davies, Committee Officer.
Good afternoon, everyone. My name is Pete Stoddart. I'm the Cabinet Member for Finance and Corporate Services for Herefordshire.
I'm Rob Wilson. I'm from Shropshire. I'm Cabinet Member for Transport and Economic Growth.
Rob Wharton, Deputy Leader and Cabinet Member Responsibility for Finance and Efficiency at Worcestershire.
Roger Evans, Cabinet Member for the Finance for Shropshire.
Councillor Paul Davies from Telford and Wrekin Council, Cabinet Member for Communities and Civic Pride.
Councillor Zona Hannington, Cabinet Member for Finance, Governance and Customer Services for Telford and Wrekin.
Okay, thank you all. So the first thing we need to do is to elect a chairman. This meeting only happens once a year, so it'd just be a chairman for the ensuing year. Please, do I have any nominations? Okay, do I have a seconder for that? Yep, that's very quick. Everybody in favour? Yeah, thank you. Brilliant.
Item 3 then, we're looking for appointment of a Vice Chairman. I ask if anyone is prepared to nominate themselves for Vice Chairman. Okay, so Councillor Evans has been nominated. Can I have a vote of show of hands? Yep, promptly appointed. Moving on to agenda item number 4, the minutes. So it's to receive the minutes of the Joint Committee meeting held on the 20th September 2024 last year. Can I ask if there's any material articles or changes or any concerns that anyone's got regarding the minutes? Any actions that anyone would like to bring forward from the minutes? Okay, can I have a show of hands then? Sorry, can I have someone to propose? Second. Thank you. And literally, can we get a vote, please? Thank you. Thank you very much. Okay, so I can look behind. Roger, there's no one there. Any public questions we've received?
No, there's no public question.
Okay, on to agenda item 6 then. So disclosable pecuniary interest. Does anyone have any conflict of interest they wish to bring to attention? Excellent. Okay, on to item 7 then, statement of accounts and annual general statement for 24-25. I'll pass across to James. Thank you.
Thank you, Chair. So just to give a quick overview of just the way this is going to work today for those that are new to this. The West Mercia Supplies part of the West Mercia Energy split off from the West Mercia Supplies part of the organisation when West Mercia Supplies was sold off, and the pension liability was retained, and that retention was held within Initially, it was held within West Mercia Energy, but because of the impact that it had on the balance sheet of West Mercia Energy, i.e. it had a huge pension deficit that was sat there, it felt that it was impacting on the potential to win business, and therefore it was separated off into a separate joint committee. So the way that we now produce the joint committee is there's 4 papers that will come today. The first one is the statement of accounts, which I'll take you through in a second. We then talk about the pension liability charges for the current financial year. Then we go into the policy decisions for next year, and then finally we just pick up the scheme of delegations, which is to me as the treasurer. So it does flow. There is an order and a reason for this, but it's worthwhile just setting that out from the start. So the first thing that we do is look back over the last financial year and the statement of accounts for the 24-25 position. So this is an unusual set of accounts. They are attached at the appendix, but they're unusual in the sense of all they are picking up is the pension liability position. There is no other real reference in the accounts other than that, and the small management costs in relation to the administration of those. So what you have is a standard set of reports in relation to a statement, the movement and reserve statement, the balance sheet, I'll get there in a moment, and the profit and loss account, basically, with a set of statements of the accounts. The details within there relate to the movements between one year and next in relation to the pension liability, and those can vary by significant amounts from one year to next based on the actuarial valuation and the adjustments that are put through at that particular time. So while you'll see great variation, it's quite technical into a number of the reasons why those shift from one year to the next, and on that basis, if you do have any detailed questions, the easiest thing for me to do is take those away and pick those up with the actuary rather than try and stumble through the detail of pension committee accounts here myself. But I have to take any questions.
Okay, anyone, any questions they'd like to put to James? Excellent. Okay, so that's item 7. Move on to the next bit then, which is item 8, which is the pensions. Oh, the recommendation of. Is it approved, is it?
Yes.
It's to approve, is it? Oh, hang on. Apologies. Okay, so what we're putting to the committee today is 2 items. Firstly, to consider the finalised statement of accounts 24-25, which will be signed by the chairman and the treasurer, and then to consider the annual journal statement 24-25. Can I have a show of hands if everyone approves? Sign that. Thank you very much. And now we're on to agenda item 8, which is the pensions liability charges. And again, I'll pass across to James.
Thank you, Chair. Okay, so the pension liability charges relate to the current financial year 25-26, and within this there's 4 basic elements that make up the charges that we just need to work our way through and make sure everybody is comfortable with them. The largest element of this is the deficit recovery payments in relation to any deficit that's within the pension liability. Now, what was decided by the joint committee 2 or 3 years ago, which way around it is now, was that the payment of the deficit recovery payments would be the whole of the 3 years would be paid upfront in advance at the start of year 1. And the reasoning for that was because that money, rather than being sat in local authority accounts, if it was sat within the pension fund, the level of investment and return on the pension fund would exceed, the consideration would exceed the level of return that would be achievable by any particular local authority. Therefore, despite the cash flow issue, giving that money to the pension fund up front meant that actually you could give less money to the pension fund because they could use that money 3 years in advance and generate more income from that, more investment income. So a value of just over £400,000 was paid out in 2023. So that's the payment for 23, 24 and 25. That then leads us on to, which will be in the next paper, as to what we then do at the next valuation, but I'll come back to that. So there's nothing in relation to the deficit recovery payments that we need to consider this year. The second element, which is in paragraph 7.2, is the compensatory added years benefits. So this relates to the previous arrangements whereby if somebody took early retirement, the way it works now is if somebody takes early retirement, then the employer has to make a pension strain payment into the pension fund to compensate the pension fund for the fact that it's paying out a pension much earlier than it had anticipated. In the past, it worked through a compensatory added years benefit payment. So what would happen is, as long as the individual was alive, they would be drawing their pension, and so rather than it being an upfront payment, every year a payment is made out to compensate the pension fund for the fact it's been paying out the pension much earlier. So you have a value there, and that compensatory added years figure will stay until the last of the people that are in that retired at that point have effectively passed away. So all we do with that is just we get that figure. That figure is delegated to me so that we don't have to come back and get it approved each time. But those figures were estimated at for this year at just over £37,000. So as with all of these charges, those charges are basically divided by 4, 25% to each of the employers. So in that case, the cost for this current financial year is £9,265.37 per employer. Section 7.3 picks up the third of the 4 elements of cost, and this is the local authority costs. So this relates to the fact that Shropshire Council is administering this scheme on behalf of the Joint Committee. So what we pick up there is any under or overpayments, the costs of determining the values for the payment mechanism, for drawing up the Joint Committee accounts that you just considered the last item, and just administering the Joint Committee itself. So just the cost of managing those meetings. So the total cost of that for this current financial year is estimated at just over £3,185. So that then is divided by 4 and adjusted for any under or overpayment from the last financial year when we've closed those accounts down. So that will be £749 each to pay for that. And then the final part is any other costs, and generally this relates to any actuary costs. So as the actuarial valuation is done, as calculations are done around that, there's a charge every year that the administering authority, Shropshire Council, pays. So that gets divided out between the 4, and then if there were any external audit costs, now we've decided as a joint committee that we won't have any specific external audit that's done around this, because it gets picked up as part of the local authority audit anyway, and it's fairly low value and it's fundamentally pension fund. So there's no external audit costs. So in table 7.5, it just summarises all of those figures together and identifies the cost for the year. What we then do is under section 9, we just talk about the payment mechanism. So following the agreement of this joint committee to keep the administration to a minimum, so we have this single meeting, we put it at the same time as the West Mercia Energy Joint Committee to try and save costs and save people's time. What we also do is we then send out a single invoice at the same time as the distribution is coming in from West Mercia Energy. And that invoice goes out to say just pay the amount within 30 days for the value here, which is for each authority is just over £10,250. Pay that by a single invoice. The cash flow implications for Shropshire Council are therefore effectively we've covered the cost for the first 6 months, but then we get the whole of the amount of money in through about halfway through the year, and therefore we're compensated for the second half of the year. So it just tries to keep things as simple as we possibly can. But I have to go through this every year to make sure that everybody understands what it is. The meeting is more complicated than anything else that we do, to be fair. but hopefully that makes sense. But happy to take any questions.
Thank you, James. Any questions for James on any of that? I think it's all pretty clear. So I refer back to page 33 in the recommendations. So we've got two recommendations. Firstly, to approve the pension liability charges for 25-26 as set out in section 7 of the report, below in line with the policy approaches approved by the Joint Committee in the Policy Decisions 25-26 report dated the 20th September 2024. And secondly, to approve the amounts due to be paid by each member authority in respect of the member authority liability charges set out in section 8 below and the payment mechanism set out in section 9 below. So can I have a show of hands, all in favour? Unanimous? That's passed. And we move on to section 9 of the report then. So again, James, on the policy decisions.
Okay, so this is the bit then we look forward to next year and we look at the policy decisions. Now, the big part of this paper is the deficit recovery payment. So each time that the pension fund is valued every 3 years as part of a triennial actuarial valuation, there is, over the last well, ever since this committee has started, there has been a deficit on the pension relating to the employees within the West Mercia Supplies pension fund. So that particular employer, there was a deficit. So there's a deficit recovery period, and so a value is paid in. So as well as employers' contributions that had gone in previously, we've now got this point where there's a deficit contribution that the employer needs to make. That 3-year valuation has been completed as at the 1st of April 2025, 31st of March, sorry, 2025. The finalisation of that valuation then comes into play from the 1st of April 2026. What we don't have as of this point, because it's not available until November, is what that valuation is. Now, had we got that valuation, this is what we'd be doing now. We'd be saying, this is the level of the deficit, and I'll just use figures from last time. So say it was £400,000. That would be the level of the deficit over the 3 years of the triennial valuation period. So that'd be 1st of April 26 through to 2029. There's generally 3 options about what you can do with that. If you do nothing, then every month Shropshire Council will pay 1/36 of that. Let's do it another way. Let's say 360,000. That's a lot easier to work with. Okay, so that'd be £10,000 a month. Okay, so every month Shropshire Council would pay £10,000 across to the pension fund for this deficit recovery payments. And what we then do is at the 6-month period, when we have this joint committee, we would then say that's the value, and then that would be invoiced to the authorities, the equivalent of that 10,000, which would be 2,500 per employer. That would be invoiced at the end of September. Another option is if it's 360,000, it's 120,000 per year. You can pay the whole of that £120,000 in April upfront. So rather than £10,000 a month, £120,000 upfront at the start of each year. You do that at the start of 26, the start of 27, and the start of 28. The other option is what we did last time, was you pay the whole of the £360,000 on the 1st of April 26. So straight away that money goes in. So the way that would work through is it wouldn't be 360. It would be actually cheaper than that because you're paying it up front, so it might be 340. Instead of 120 each year, it might be 115. But if you pay it's monthly, it'll be 10,000. So it's the simple, like the way that direct debits work and that sort of thing. Pay annual or pay monthly. Because we haven't got that information, we can't make that decision now. So as it stands, without anything changing, the default position is in play, which means from the 1st of April 2026, we will pay the equivalent of £10,000 a month in, and that's the way it will work. What we've set out here, though, is there are 2 other options that you could consider. One option would be, once we know what the value of that valuation is, what the level of the compensatory payment would be, we can do the calculations on should we pay it annually in advance or should we pay it 3 years in advance. and we can send that around. You can have a look at it, and then we can decide to hold a joint committee meeting at some point, maybe January, February, March, which will be all of us coming together literally for 5 minutes to go, which option do we want? And then if we all agree on it, we do that. That's one way of doing it. That's option B. Option C is that you delegate the decision to me in consultation with the chair. Now, I think in reality, the way that that would work is we get the same report, get the same valuations. That would come to me. I would share it with the chair. The chair would then share it with all of the joint committee. And if everybody just emails back and says, yeah, we all agree, we'll do A, B, or C, you can do that. If you want to have a conversation about it, or there's differences of opinion, we would have to hold a meeting. If no decision is taken, we remain at the monthly. So we have, there is you don't have to take a decision in a sense. That's what will happen in default of everything else. But I think the committee just need to discuss what you want to do in terms of managing that, because we won't have the valuation until November.
James, thanks very much. That's very clear. Anyone want to make a point? Sorry, Richard.
In the option C here, it doesn't say about referring to the other authorities at all. It just, yeah. Does that need to be built in or not? Or is it understood by the chairman that you would?
I would, if I can, Chair, I would suggest, I didn't put it in because I didn't want to lead them too far, lead the committee too far. I think you agree what you want, and then we put that down in the minutes clearly as to what's been agreed. But I'm open to whatever you want to do.
Thank you. Any other points anyone would like to raise? Any other questions? Go ahead.
I'm happy to leave it to your discretion with the chair, but as long as we're just kept in the loop on what you're doing, I'm comfortable with that, to be honest.
Okay, so the recommendations we have to go through. So we consider the 3 options and agree which option we use. We've got A, B, and C. C is the option that Councillor Wharton was just mentioning. Can I ask, is everyone happy with option C? Councillor Davies, you happy? You look a bit.
Yeah, I think as long as we're all kept in the loop.
Yes. Yeah. Well, I can give you my assurance that when we find the figures, we'll put them around, and if need be, if there is any discussion needed, we will convene back here again.
Yeah.
Chair, you need the figures, because you may see the 3-year, and it's like vastly cheaper, and it's like a simple answer. It might be a few pounds, and some people might say I'll do it or not do it. You need to see the figures before you can, and I can't really prejudge what that would look like. So that's why it's difficult to kind of say this is the best way to do it. You might see it and you all might come back with completely different opinions, and then you go, you know what, I think we need to meet around this. I really just don't know.
Can we not see the figures and then make the decision as to which option we take? So can we postpone the decision?
So C is the way to achieve that. Pushing it down the road until the figures come out, I then email you all. People read it, sorry, James, figures, explain all that. If there's any concerns you've got, then we then default back to the front table and discuss it. If however everyone's happy with figures, then we agree on, we then go to the option 1, 2, 3. Do you want to pay up front? I believe, so we then discuss that. So that's the decision. So there's 2 stages. One, we agree we'll defer to the figures. And we'll then James will come back to you all. At which one we then make the decision to use to pay monthly upfront or.
Okay, thank you.
Okay, so we'll go with this. I'll now propose that we go for option C. Can I have a show of hands? And then the approved policy, which is the NC rate and the GA's leave authority was calculated charge. Get told off again. Sorry for apologies there. So just do you want to go back? Yeah. So that's us. We've agreed that C is our declared option. We'll go forward with that, and then what we'll then do under option C in November, as James suggested, we'll then consider which of the compensatory as years we'll go for, which is options 1, 2, or 3. And if there's any debate or discussion, then we'll refer back to a physical meeting to then discuss it. Kind of a show of hands, everyone agrees with that? So, Unanimously. Okay, so that's policy decision. Now on to item 10, then scheme of delegations to Treasurer, to James.
Thank you, Chair. So the scheme of delegations, it's the same report that comes through every year. There's a set of delegations in there shown as Appendix A, which basically just allows the scheme to the basic mechanics of that to work through in the background. I bring it forward every year because we have new members, we have those changes that keep happening on a regular basis, and I like to have the delegation approved, so it's never more than 12 months old. Otherwise, I find myself referring back to something from 10 years ago, and it feels a little bit wrong to do that. So nothing really to decide, just to confirm that you're happy with the delegations to stay as they are, and just reconfirm those.
Thank you, James. Anyone get any questions or any observations or points they'd like to make to James regarding these observations? No. Okay, can I therefore have a show of hands in regards to the recommendation that we approve the scheme of delegations attached to Appendix A, please? Okay, thank you very much. That's unanimous. Passed. On to agenda item 11, which is the date of the next meeting, which will be held in September 26th at the date to be issued by the Chair and the Secretary. Okay. Any AOBs that anyone would like to bring up at all? No, excellent. Okay, well, thank you very much. I declare meeting closed at 2:27. 3-minute comfort break before we start again at 2:30. Thank you very much.